Hey guys, how's it going? Today I have a day off. Decided to take one of my vacation days as I have a lot to take the remaining of the year. But I wanted to look at gold prices, right? Gold has had a great rally since the beginning of July, where it was like 1210. I think I did a video a few weeks after that where it hit 1240, 1250, and I expected a decent rally. And the reason why I said that was in the commitment of traders that the CFTC releases, the producers or the commercial hedgers were net long 130,000 contracts in yen, right? That's a large amount. Look over the last few years. Every time the commercials have gone very net long Japanese yen, gold prices have rallied. And from a purely fundamental perspective, why does this happen? Well, people that buy yen and gold, they look at one thing in common, and that's negative real interest rates. And the Japanese yen and gold, um, they're just, some may argue for gold that they're store of value. And that's why when you have negative real interest rates, gold rallies. And since 2011, sophisticated investors have just been pouring into yen when you have negative real interest rates. And that's what we have right now. And how could you determine negative real interest rates? Well, how the market determines it is if you look at the inflation rate, right? If that's greater than the 10-year yield, then that would make interest rates negative. And we've definitely seen higher inflation rate. I mean, if you want to look at the CRB index, right, that's been rallying. If you want to look at other commodities, you could look at the bottoming out of coffee prices, the bottoming out of sugar prices. The list goes on and on and on. And like I was talking about earlier, the CRB index that has rallied since I believe it was mid June. So you're starting to see a little more inflation than what you had a few months back. Like if you remember in late June, right? A lot of commodities were getting smashed, or middle of June. Like coffee was getting smashed, oil was getting smashed, gold wasn't doing well as well. I mean, gold wasn't performing well either. And right now, even though gold prices have rallied, or yeah, gold prices have rallied at 1350, and I expect gold prices to go slightly higher, at least test the high of Brexit, which was 1372 to 1375 ish. I've also looked at technical analysts, and they said that hey, it could hit $1,400 an ounce. However, my only concern for the rally to get past that is that the commercial hedgers, if you look at the um, gold commitment of traders, the positioning sizes by the commercials, they've sold. This is as of last week. I'm probably going to do an article on Seeking Alpha explaining why I think gold prices don't have that much upside right now. I'm talking about within the next 3 to 4 months. And that is because of the commercial hedgers starting to sell a lot of gold contracts. And the open interest, I believe, is like 539,000 contracts. So it's getting higher. And you're seeing a lot of speculative buying by, guess who? Hedge funds. Hedge funds are piling in. They weren't piling in when gold was like 1210, for instance. Now they're getting excited, right? Once it got over the $1,300 resistance, that's when they're doing their trend trading and all that craziness. Now, I think I would be cautious in putting on any gold long position. I mean, what I've usually done lately is I've just sold options in the futures markets, right? I got a little too early than I should have. I know people ask me like, do you have your money where your mouth's at or something like that? And I said, yeah, I was selling options in the futures market. just got out way too early. I mean, once it's hitting close to $1,300, I just got out. Even though the positioning sizes in the in the Command of Traders showed that, hey, gold should have rallied even more based on how much yen the commercials bought. Now, if you want to look at the dollar index, I've been wrong on that. I did short some E-micro contracts in the futures markets. Well, that's basically working as a hedge because I do have other positions that I've sold. I've sold like coffee options in the futures, sugar options, cocoa options. So yeah, it balanced itself out. And I do have another spread position where I've sold a 120 call in the futures market for the euro. I'm hedging myself by buying a 125 call for the euro. And the dollar index, I've been surprised. I didn't expect it to go up to 120 right now. I did expect it to go up to 120 later on this year. We do have the German elections coming up. I believe it's September 24th. You could correct me if I'm wrong. So that's one of the big highlights going on. But in terms of reversing this trend for the dollar, the way that I see it is if you have the 10-year yield go up, right? The most important bond rate to look at. If that yield starts to go higher, the euro rally is going to go bye-bye. And gold prices are going to go down from there, right? So important things to note, 10-year yield, I feel that we have a short-term bottom for now in the next few weeks. But assuming that we have another Fed fund rate hike, right? How these trend traders usually do it, they usually buy the dollar, sell gold, sell commodities, and all that fun stuff. Got the dollar rallying, the euro sells off, and then shortly after the Federal Reserve raises rates, then you see the sell-off in the dollar, right? I've talked about it before, the interest rate differential and whatnot. So, like I said, gold prices, I expect to see 1370 this year, and potentially to 1400. 1400 should be the top for this year, and then I'm going to probably revisit adding on to gold option positions next year, maybe Q1, Q2, but I just need to see more data before I do make that decision, right? I'm going to look at the Japanese yen and how much Japanese yen the commercials are buying. If they're buying more, then I want to add to my gold position. But right now I'm being cautious about gold, and the sole reason is that the 10-year yield is about to rise, and the commercial hedgers are adding on to a lot of short positions in gold, which is like, what, 244,000 contracts. I haven't seen the commitment of traders today, and once I do, then I'll probably have a better feel for gold. And I'll probably add in a Seeking Alpha article that I'll probably write. So catch those articles out. I'll put a link below. I haven't done an article for the last month or so. I'm still busy moving into my new place. And yeah, I had my mother-in-law and father-in-law and their family came over for a housewarming thing. So I've been extremely busy. But yeah, I still plan to do these videos, but not as frequently as I used to do a few years ago. I'd rather focus on quality rather than quantity. Anyways, guys, talk to you later. See you. Bye.